Okay. All right. Well, we should be on and going. So, hey, this is Reba Haas from Team Reba and Remax Metro East Side, also from the show Open House with Team Reba, coming at you live from my living room. And I'm here, of course, with my good buddy, Eric Aasness from
Hey
Homebridge.
everyone.
And so, as we had said, we were going to be doing is twice a week market updates because we know in this new normal everyone has, which is not normal. A lot of people have a lot of questions going on about what's going on in the marketplace. Not only are people watching what's going on with their stock portfolios and things like that, but they're also concerned about what this means for housing and whether they should stay in the market, get out of the market, what's happening to the market, what's happening with pricing and valuations, as well as if you are in the market to purchase or to do a refinance on your home, is it a good time? Right. So I think last time, hey, Ron, thanks for being on. Last time we started off with me talking about a bunch of stuff, but I think, Eric, I'm very curious because we've had the whole rest of the week going on, and I would be curious to know since Tuesday, what has been happening in your world?
Yeah, actually, we had finally a fairly stable, calm week this week in the financial markets.
Good.
So last week the Fed was maybe over aggressive and intervening in the markets. This week they backed off a little bit and let things play the course. So we're stable this week. Very happy about that. So the standard conventional 30-year fixed rates are hovering right around 3.375% for a purchase transaction. Jumbo rates are still a little bit higher. They've yet to come back down, but those are still up in the low 4% range.
Okay, hold on. At least they've dropped because when we did one of these before, they had shot as high as the sixes. So they're back down to fours.
They have. There are some jumbo lenders that have simply exited the market. Some are just completely saturated. I was looking at one big lender yesterday. I don't want to say the name, but they have sort of a hexagonal logo, if you know what I'm saying. They were quoting
The Allen wrench could fit in it.
and possibly they were quoting right around up in the low 6% range with 10 points for their rate, which is a way of saying, go away. You know, we don't want to take any more loans in at this point. So we are seeing quite a bit of that actually right now. And even some, actually many refinance transactions are being stalled or delayed, or you're not allowed to lock in your interest rate at this point. So we've been fortunate with that. You know, at Homebridge, we're not kind of going down that path. We're open for business. Rates are good and well capitalized, which we're happy about.
Good.
So that'll continue.
That I wanted to have talked to. Hey, Jonathan, how you doing? Hi, Rosa. Okay, so Eric, you know, I'm always about like, because you're in this in the day to day, you have knowledge base that a traditional person possibly watching this really doesn't have. So, like when you say there's people exiting the jumbo loans, there's what's going on with the volatility and rates. Could you please like give some more context to that? Like,
Sure.
what is a jumbo loan? Why does this matter? Uh, who are the companies? Well, you don't have to go like through the lineup, but the companies like who are the typical kinds of companies that provide those loans? Because we know not every lender offers them. Can you give a little rundown on that for people?
Sure. Yeah, sure. I mean, a jumbo loan in our local King, Pierce, Snohomish counties are loan amounts that are greater than 741,000 essentially. And so anything above that falls into a different category. The biggest distinction is that those loans cannot be sold on the secondary market to the government. They can't be sold to Fannie Mae or Freddie Mac. And so as a consequence, the market is much smaller, much tighter for jumbo transactions. Lenders involved in jumbo are still trying to securitize their loans once they're made. They try and sell them, but there's just no buyers right now. And as a consequence, some of the bigger jumbo lenders, and jumbo lenders can be a major bank, Bank of America, Chase, Wells Fargo. Also, there's quite a few smaller banks. We use quite a bit, BB&T, and there's just a whole bunch of different lenders that will make jumbo.
Okay,
And,
the defining factor is that they have a lot of assets, right? They have to have large dollar assets available, because that's
Yeah.
one of the requirements around jumbo loans, because there's such high dollar volume, right?
Correct. But even some of the big lenders are holding back right now, because one of the other things that happened is about 3 weeks ago, rates got really, really low, almost to where, I mean, a little bit even lower than where we're at today. And as a consequence, lenders were loading up on refinance activity, and it buried them. Then when COVID hit, we're sending people home. People are working from home. You lose some efficiencies, and lenders got overwhelmed. And so we are seeing many lenders actually just sort of turning off the tap right now so they can catch up. They do that by raising their rates. I was even looking at a big local credit union that is in Tukwila that did the same thing. They raised their rates fairly significantly over the last week as a way of just slowing the pipeline down.
Well, I'm really glad I sent that one client, because that's where they were at.
Well,
What did you say the conventional rate was right now? You said it was 3 point what?
We're sitting right around 3.375 on a conventional conforming purchase for someone with good credit. It'll of course vary depending on your credit score and the loan amount and a lot of different factors, but that's roughly where we're at right now. So sort of low 3% range. And so very good right now, no question. And,
definitely really great. Okay, so just going back over to that aspect of what we were discussing with jumbo loans. So jumbo loans usually have a requirement of how much down?
Well, the minimum is typically 10% down, and some there I don't know of any that are less than that right now. One of the things that is changing almost on a daily basis right now is as the volumes are hitting us, and as this financial situation is evolving, lenders are becoming much more conservative in their underwriting. They're pulling back some of the guidelines. So 10% would be the very minimum down. Many are going to 20% down or 15% down. There's a few options still available. Minimum credit scores are going up as well.
And what are those looking like?
Well, for jumbo, we're really not going to have much luck if we're below about a 700. On conventional loans, we're not going to have luck if we're below about a 640. And the same thing for FHA and VA, which up until this week we could get them through around as low as 580. Now 640 is pretty much the minimum benchmark for almost all conventional and government loans, FHA and VA loans. Okay,
so where I'm trying to also give some other context to this as it relates to the market then locally. So let's say, okay, so a few might offer the 10%, but if you're saying most of the lenders will be requiring a 20%.
Correct.
What does that look like from the loan value and a 20% down? What's that look like as a purchase price?
Well, I mean, if we're at the sort of 741 mark, that's about a $925,000 purchase with 20% down.
Right. Okay.
And with 10% down, that's around 823,000, as a down payment. And with 15% down, that's about a $872,000 purchase. So if you're somewhere above that mark, you're good. With a loan amount of 741, it is possible to put 5% down, which would put you at a sale price around 780. So let's put it this way: if you're 780 or less for a purchase price, you can still buy with 5% down, and you won't have a problem with that. And but if we're above a loan amount, a sales price, I should say, is 780, then we're looking at putting at least 10% down or more.
Okay, so I'm trying to make sure that people understand kind of what's that really look like. Yeah, as they're watching this, because I've got people on my page, and we're going to share this in other social media outlets as well, and on our blog site and everything else. So when people start asking me about what's going on in the real estate market and how all of this is impacting it, or not, right? I'm personally of the mind that I think that anything that is in that higher price point range is going to be what is hit the most significantly, right? In terms of the number of sales, and the price points, because if we're talking 780,000 plus, well, we're mostly talking about the north end, kind of central and north end Seattle market. We're most definitely talking about Bellevue,
East side.
Redmond, a lot of east side. Now, not east side like Renton,
Right.
not so much as in Bothell,
Or
except
maybe Newcastle North, you know.
right. Yeah, exactly. Newcastle North. I mean, and this is going to hit like the new construction though, that's in Renton, that would be like Issaquah School District and in the Highlands. So some of the bigger homes, the newer homes, any of that is going to get some whammies. And so what it means for people is that, like, as you're describing it, Eric, my suggestions would be then if you're in that price range in terms of, and those areas that you want to reside, well, make sure you shop that jumbo loan. If you were with one of these big lenders, because a lot of times, like, here's what I want our listeners and the people viewing this to understand. Some of those larger banks that you just described, often our clientele has accounts already with those vendors.
Sure. Yeah.
And they're often trying to capture as many products in their portfolio as possible, whether it's their wealth management division, their savings accounts, checking accounts, you know, and then they want to get your homes and all that.
That's right.
But not always the right choice. And what Eric is sitting here describing is right now, they're probably not the right choice because they're trying to minimize their risk right now. So they're reacting a little bit like what we had during the housing crisis, where they're like, "Woo, hold on,
That's exactly what's happening." Yeah.
So because they're concerned that, you know, with their assets, there might be people pulling things out or needing to put the brakes on things. So they're going to minimize their risk right now. And part of that is to not take on these higher cost loans. So
right.
Go ahead.
It's really important to, and I'm glad we're doing these regular updates, because this situation is extremely fluid. It's changing every single day. So by next week, this might be resolved, or by next week, it could be a little bit worse. We really, truly don't know. Yeah. So it's very important to check in. Even if you were pre-approved a couple weeks ago or a month ago with a certain lender, you think everything's all great, check back in, because it's possible that the program you think you have no longer exists.
Yeah, we're telling that to everybody that we're talking to right now, because, you know, we have our regular client base that's worked with us in the past. And then, of course, I'm a Zillow Premier agent. So we have lots of new people who are kind of coming into our ecosystem. And that's one of the very first conversations we have to have is, you know, are you already pre-approved? When was the last time you checked in on that? Oh, gosh, that was 30 days ago, 6 months ago, a year ago. Oh, my gosh, please, we need to have you talk to somebody to make sure that all that is still accurate. Because exactly what you're saying, Eric, there's a lot of moving parts right now. And a lot of people, unfortunately, they get this belief system that, oh, well, I have this piece of paper and it says this. That's, like you said, it's fluid. The monetary markets are fluid. And people forget that. They think somehow like, oh, well, I was told this. Yeah, it doesn't mean it's going to stay that way every day. So check in, right? It's kind of like how you have in relationships. You got to check in.
That's right.
You can't just assume everything's all hunky-dory, because then you wonder, like, why did that person just leave? I don't know. You know, you really have to check in and know that that relationship is still functioning properly. So, you know, I always love tying this back into other things, but I mean, that's a true one right there. So what I'm going to be trying to pay very close attention to over time now is, as I mentioned, those price points, those things that are 780 and above. We're going to be watching really close because this, I'm going to, if it's okay with you, Eric, I'm going to switch over to a share screen real quick.
Sure.
Because when we are, and of course it's going to the wrong screen for me. Oh, stop it. Stop. This is the one thing I don't like when it does this. There we go. This is what I'm looking for. We brought this up on Tuesday's information. So this market watch, where I have my cursor kind of moving around right now, The market watch is what I'm always paying attention to on a daily basis. And I'm always looking for what is the differential between these 2 points to start with, right? And then if I, see any adjustments where they're like getting close to each other or one's surpassing the other from a different perspective, I'm paying close attention to that. And then I start looking at what's happening here too, right? So for many years, we've had this kind of differential here. And these two numbers are growing right now. Okay. Now, as I mentioned on Tuesday, the back on market can be from a number of reasons. It could be people who just got cold feet. It could be because an inspection didn't go well. It could be someone's financing fell through. It could be that someone went temporarily off market, as we had that small period of time where we couldn't show property. And they may have said, hey, we're going to go to this status while we wait to see what happens. There's a number of different things that can impact that particular number. Listing price reduced. Again, sometimes that's time on market and people didn't get what they wanted to begin with. And so they're like, okay, I'm listening to the market. I'm paying attention. I need to make an adjustment. Or maybe they had a failed transaction because they found some stuff during the inspection. And so they, maybe that deal failed and then they had to reduce the price at the same time. That back on market and list price reduced could also be one and the same for a particular property. So what we start looking at is like, is this number, growing quite a bit? And then a lot of times I can go right into that and take a look like, well, where are these things happening? And as you can see on my screen, we had a pending feasibility, pending, temporary off market, a contingent deal that fell apart. Here's some pending deals that failed. That's probably financing most likely. And that could be because someone just couldn't get their loan, or maybe they did go through a job loss right now. So you can see there's a wide variety of these things that are happening, but look at some of the communities that are here. In this column, not all of them are even in our major metro area. And that is not uncommon in a lot of these cases for them to be further out. Because as we know, demand is usually stronger the closer you are to a job center, right? There's concentric circles almost of viability around that. So, we're constantly looking at these different kinds of things and paying attention to what that might mean for the rest of the marketplace. Okay. Now, what I also talked about on Tuesday was here in this listing pending, it's gone down quite a bit. If we went back to, a week or two ago, we would have seen this number be closer to, we saw 2,300, I think it was, when we did this on Tuesday. In fact, actually, Eric, I've got these big charts in my office that I'm now going to start writing down what I see when we do these calls. And then that way we can refer back to them when we do our update. The comparisons. Yeah. Okay. That's an ongoing changing total when it's on the MLS. Okay.
Very old school.
Yes. Hey, go with what works, right? But at least that's memorialized so we can refer to it as we're looking at what is the constant fluid, numbers here. So we were seeing about 2,300 just a few days ago. Again, we had that window of time where we couldn't do any showings. They only opened us up on Sunday. So I am not shocked. I'm not shocked that this happened this way. And as a reminder to what happened on Tuesday, I was doing showings, I think that afternoon. Both the properties I showed Tuesday afternoon after we did one of these got offers that day. They had just gone on market, and they weren't our clients who got it, unfortunately, because one of them, our client, was interested, and an over asking price offer came in. And another property that I showed that I thought was weird as hell also got an offer on it. So there's still activity, and that was 2 days after we were given the go ahead to start doing showings again. So there's definitely a window of time where we weren't getting anything done. And that's why these numbers, because this is a 7-day, right? If I go back, this is a 7-day cumulative number. So I'm not surprised that it's down. We'll be keeping an eye on it and see if it starts going back up now that we've had that, released to limited services now. And then the listings sold, again, we said when we started this, there were 17,000 transactions already in process when we had the stay-at-home order go into effect. And so now they're working around all of that. They're doing electronic notaries and signings, which was something we didn't used to have allowed to do, but they've had to do that now because of the changes. And so, all the industry has, done a pivot on that and made things available. So this is really good. So the listing sold at 1819 is still about where it was. So it's just everything's still continuing to complete. So maybe in about 3 weeks, because of this blip where we couldn't show anything and the pendings went down some, in about 3 weeks, we'll probably see the sold number bump down just a little bit, but that's because that's, it's a lagging number. It's going to be a 30 to 40 day behind what's actually happening behind the pendings, right? So we'll be keeping a really close eye on all of that. What I will definitely be looking for is whether or not the people who are doing the price points in that 780 and above are indeed starting to show price drops to get people in the door, or if they're just going to be longer time on market because they're waiting for people to find better financing, or they're waiting for the person who's got the down payment availability. Because the difference of a 5% and a 20% on some of these properties, can you give the dollar amount again real quick, Eric?
741,750 is the exact number. Any loan amount that's the loan amount, not the sale price.
Right. That's the loan amount. But what would that sale price be? Because then if I'm talking about it, if they are doing a 5%, now you said like a 780 house at 5% down.
Yep, but you're there with 5% down, you're at 780. And
right, what's the dollar amount of that down payment at 5%? That's what I'm asking for.
Oh, it would be about 39,000.
39,000. So let's go. Let's take that into what a jumbo one would look like, where 20% is required.
Mm-hmm.
Just like
I mean, it depends on your sale price, but if we're, if we're like, let's say, 20% down, I mean, it's going to be sort of 925, somewhere in that range. 20% down is going to be at least about 185,000. Big difference. Right.
What I'm trying to point out here, Eric, is not everybody's got $185,000 sitting around right now.
They don't.
Nor are they in some cases wanting to, put that into this, right? If they're like in a fearful state.
Yes.
Right.
Absolutely. And so, if you're trying to set your price point, 741's your loan amount. And if I'm looking at, I've got, 5% down, something like that. Well, then I'm at 780. If I've got a little bit more than 36,000, if I got 46,000, I'm at 790. If I've got 56,000, I'm at 800. So as long as we can keep that loan amount at or below 741, we can do that with the standard conventional loan programs and the best rates.
So what it's going to do is it's going to impact the people purchasing right now, where they're going to buy, because as soon as you're talking about what that price point looks like and how much they have to have as a down payment, that is 100% going to determine what's their commute going to look like. And in today's environment, I don't know if your job is one that can become more of a, commute from home, or you get to have more of that as an option for you. Maybe you are willing to, be further out and get more for your money. Right. But I can tell you right now, 780 in the city of Bellevue ain't a lot. Right.
It's a condo.
It's a condo, or it's a house in, maybe not refurbished condition, or not in the most popular zip code, kind of thing. Right. So it just all depends, right? We're always talking about that. And, so for those of you who are selling your homes right now, these are things to be thinking about. But it also shouldn't stop you, because here's the other thing, like I mentioned earlier, there's a lot of pent up demand. There's definitely a lot of pent up demand. This is the time of year that most people are trying to put their homes on the market, because we've got the best weather, we've got the most showing hours, because most people want to see your house while there's daylight available. We have methodologies and ways for us to do that safely. and to keep everyone healthy as well. So you're going to want to have very close conversations with a real estate professional like myself about what we do and best practices. And if you're still living in the house or if you're not, you know, there's all these kinds of things that we have to discuss, but we would have had to have those discussions anyway.
Absolutely.
So now it's just more about making sure everything's safe and clean. So nothing's really changed from that perspective. And the reality is we know that life goes on. Life is going on. Even when we had the housing crisis from 2007 to 2010, roughly, people still had things they had to do. They still had jobs they had to move for. They still had military relocation. They still had someone needing to get started in college, or, you know, whatever it was that they were doing. All of those things are still happening. So, just talk to us. We'll watch the market conditions. We'll give you sage advice about best ways to do things. And we're doing virtual tours now more than ever. You know, my team has been offering Matterport 3D services for years. And if you don't know what that is, it literally is like having your house put into a format that they can actually use the virtual goggles and glasses to do a walkthrough of your home. And it's a great first way to introduce that property to the consumers out there and let them see it, and then decide if they want to go ahead and come on out. Because some people are still a little gun shy about just going to see. But if you have a service provider who's allowing for that, then you have a better chance of someone coming, because those do a really good job of showing the layout and design of the house, as well as kind of the spaciousness of it. You know, it gives a really good feel for what that space is going to be like if you're standing inside of it. So, and here's the thing is, like, when you are selling your house, you want to have the most realistic type of photos and 3Ds, because here's the way the consumer buyer works today. They want to know, I always joke that this is like online dating. They don't want to be catfished by your house. Okay. They want, when they show up, for it to look like it did in the photos. You know, they don't want a surprise like, oh, that must have been a wide angle lens, or, oh, someone did that with their cell phone, and so that didn't quite capture, you know, what was there. So, work with good professionals more than ever. It's really, really important to work with people who are very experienced right now, because they're going to be the ones who can really help you through these situations and what's going on right now, and give you really good guidance. And particularly if they're full-time at it and paying attention, you're going to want to ask those kinds of questions of the people that you're working with. So it's another reason why I work with Eric, because he's got a ton of background and experience. And that's why we have been working together for a really long time. Not that I don't have other options, but, you know, we've worked together a long time for a very good reason. And if you have questions in the meantime, you can send them to me at info@teamreba.com. We'll be happy to address them during other ones of these Facebook Live events that we're doing. Eric, are we going to continue trying to do the 1 p.m. next week for both Tuesday and Friday next week?
Yeah, let's do it. Yeah, for sure.
All right. So if you want
to be different by then anyway. So
with that,
everything will be different. So good to update. Yeah.
Oh yeah, it's definitely going to be that. And of course, as we all know, the stay-at-home order has really been pushed out more to, what is it, May 4th? I think they asked.
4th.
Yeah. So this will be going on a little while. So we're going to keep doing this and trying to get you good information about what's happening, and the recommendations that we have and the suggestions. And again, send your questions to us. If you want to text anything to me also, you can do that at 206-910-3429. Please don't spam me. Real valid questions, please. There's a lot of stuff going on. So, and like I said, we've been having tons of conversations with people about this. A lot of people are wanting to know about what's going on. We also have, and you can send us your address if you want, info@teamreba.com. We have a thing called the Home Beat project that we're doing, where we have our clients being put into a system that will every quarter give them an update about the sales activity in their market area, so they can have a kind of an idea of tracking what the valuations are kind of in real time so that they know, one, like if you bought recently and you want to try and get mortgage insurance off your loan, that's a great way to kind of determine, are you at that 20% or more equity position? It's also great, like if you're trying to just figure out, hey, I'm thinking about moving up into something right now or downsizing right now. Where am I at? What might I get out of this? And then if you really, really want to get it localized and specific to your house, you can also ask me to set up an appointment with you to do that. So we can make it very specialized, not just like what's generally selling in your area, but what is very specific to your own home. Eric, do you want to give your information real quick in case people have questions?
Sure. Yeah, you can catch me anytime. Email me at eric@ericasmybanker.com, or you can call me at 206-915-3742. And likewise, if you're trying to match the payment up to the house, let me know if I've got an MLS number and how much you want to put down. I can run some calculations for you very, very quickly.
Okay.
Happy to help. Yeah.
All right. Well, fantastic. So we appreciate everybody's time who spent it watching this video, and it's going to, of course, be up here in case you want to come back and refer to it and or send it to anybody you know, maybe tag them or share it to somebody in Messenger. And like we said, we're going to be back here next week, Tuesday and Friday. I'm about to go put it on my calendar, 1 p.m. doing the same thing. Okay. So anyway, you guys all take care. Happy Friday.
Yeah.
Shelter in place.
Great weekend, everyone. Yeah.
It was hard to say like have a happy Friday because everyone's like, yeah, I'm already home.
We can do it.
Yeah, and we do. And again, also thank you to all the people who are on the front lines out there. I got a lot of friends who are on my Facebook feed list who are those folks out working in the hospitals, in the restaurants, in the places, you know, the groceries and the Costco's and what have you. Thank you so much for, you know, spending your valuable time helping take care of the rest of us while we're trying to take care of ourselves and our families. And, you know, we had some pretty big hits in our own team this week where this stuff super hit home with some family losses and whatnot. So we're there with you. We understand, we know the anxiety that people are going through. And, you know, we're trying to share as many resources as we can to help get you sanely through this situation. So anyway, thanks again, everybody. Be good, be safe, and we'll see you next week.
All right. Thanks.